Good evening, this is Doug Gerlach from iClub welcoming you to our Toolkit 6 user group webinar. Tonight we are going to be taking a look at conducting a quarterly company review in Toolkit 6, the steps that you need to go through once a quarter to update your judgment and data in Toolkit to help you manage your portfolio, help you identify any changes that might affect the companies you own, and ensure that all of your stock holdings are on track to deliver the desired rate of return. Today is Tuesday, May 5th, 2015. Glad you could be with us today. We did hit a milestone with our Toolkit 6 user group webinar since our last meeting. There are now more than 2,000 people who have signed up for the Toolkit 6 user group series. That's more than we can accommodate in any single session, but I know a lot of people sign up to get the alerts, and even if they can't attend live, you can always visit the archived webinars that we have available for viewing on demand from the iClub.com website. So thanks for being part of such a great group, and we do appreciate your support. Before we begin, let's review our technical problems. GoToWebinar.com is the provider of our webcast and webinar services. That means they handle all the technical support for the interface. They handle all the registration of users. So if you have any problems, you can always visit them at GoToWebinar.com or calling them on the toll-free number 24 hours a day, 7 days a week. If you think you're having some sort of difficulty hearing or connecting, they can always be reached. If you need to update your email address or other user information, you do that directly on the GoToWebinar.com website. You don't do it on iClub.com or BetterInvesting.org. We actually don't have the capacity to update your email address. If you need to, you can always unsubscribe and then resubscribe using your new email address. But you can change those by logging in using your account on the GoToWebinar.com website. Now, reminder, if you can't hear me properly, if the sound or graphics at any point drop out or become choppy or become scratchy, it's always a good idea to make sure your computer is focused on our webinars, as your attention hopefully is. So turn off any unnecessary programs that might be running in the background. Don't connect using Wi-Fi if you can help it, and always, as an option, you can listen on the telephone by dialing the number provided in the GoToWebinar email with the PIN number there if you need it, with the event number, and that'll connect you right up so you can hear. That'll free up your computer so that the graphics will stream down a whole lot faster. At any point tonight, please use the questions box in the GoToWebinar application. You don't need a microphone. We won't be calling on you, so you don't have to worry about that. Just type in your question at any point. Tonight, we're glad that Ken Peters is with us in the back office offering his services, so he may also answer a question if it comes through, if it's something that he can take care of and help you out with. So thanks, Ken, for being with us once again. On iClub.com, we have our whole archive and history and schedule of webinars that are coming up. So check that in the Learning tab. There's also a link on the main page of iClub.com tucked on the right side. But if you can remember getting to the Learning tab, where we have our learning tools, our all sorts of articles on investment analysis, stock analysis, using our software, running an investment club, that's all available there. And we do have a Toolkit 6 schedule now for the rest of the year, including topics. So please check those out and put them on your calendar as well. Now, we do meet on the first Tuesday of the month. That's our regular meeting schedule. But we do occasionally have changes to that based on my travel schedule if I'm not available. And we have done some adjusting, moving it a week before or a week after, depending on the schedule, just wanting to keep the information flowing as best we can. So I apologize if occasionally you might seem to miss one or we seem to be off schedule. We do put those notes on the iClub.com website in the calendar there in the webinar schedule, so you can check that out. Our upcoming webinar series includes in May our Investment Club webinar on May 19th. That's Tuesday. Our Lunchtime Stock Club, we met yesterday, and we're going to be meeting again next on June 8th. You're perfectly able and invited to attend our Lunchtime Stock Club, where we talk about stock picks and users make suggestions, and we take a look at them in Toolkit, and we chat. We're a small group, so it allows us to really dig into some of the analysis. Sometimes it's back-of-the-envelope stuff. Other times we might be discussing stocks that we feature in the Small Cap Informer and the Investor Advisory Service. So that's Monday, June 8th. And then we'll be back with our Toolkit webinar on June 2nd, 2015, and we're going to be doing a real-time live stock study. So we're going to take a current stock of interest, and I'm going to run through how to analyze that stock in Toolkit, what to look at, where the red flags might be, and so you can follow along and learn more about utilizing the full functionality of your Toolkit 6 software. So that is next month, first Tuesday of the month, June 2nd. A reminder that handouts, the PDF handouts, are published when we release the archived webinars. So the video function has an attachments tab below it. You can click that and download that PDF. So if you want to save that for reference or follow along as you're viewing the archived webinar. Yes, I know. I did a presentation in Cleveland on Saturday morning, and afterwards someone reminded me that I tend to talk very quickly. But there's so much that I want to cover during the classes I teach, really trying to help you make the most of your time. So I apologize, but the great thing about the video archives is that you can pause them and replay them. Back up 30 seconds. What did he say? I couldn't quite catch that, so there's the advantage there. If you are on Facebook, we invite you to like Toolkit 6 there. The more people we have there, the more we can reach out with date changes, releases of archived webinar videos, and upcoming topics. If you prefer to get updates that way, we certainly would appreciate you liking us there. So let's talk about our topic tonight, conducting a quarterly review of a company in Toolkit 6, looking at the functions that you should be taking, the steps you should be taking when you review your holdings. So these will be stocks that you own. Perhaps they're stocks that you're following, waiting to see if they're going to fall into the buy range. What are we going to look at? What are we going to do? What do you need to do in the program? The great thing about the Better Investing Toolkit approach to stock analysis and portfolio management is that you don't have to spend every day at your computer checking your portfolio, refreshing the prices, so that you're not tripped up by sudden changes. You really only need to do it 4 times a year to update your companies, to review your holdings, make sure things are on track. There's a pragmatic side to that recommendation because historically it was much harder for individual investors to compete with Wall Street with their real-time data access, but even today it's still, as our access as individuals has gotten much better to data, we can certainly get press releases and earnings reports very quickly, and then all of a sudden we have flash traders who are trading in nanosecond increments, and there's just no way we can compete with them. Even if you are a diligent investor, by the time that you learn about a company's problems, the big hit has already happened. The damage has already been done. If a company comes out with a negative earnings report at the end of the market day, or if there's news that comes out about the company's operations that is negative in nature, by and large, by the time you can take action, the big damage has already been done, and at that point you can use your time more wisely by holding on, by doing a more prudent review of the information that's available, by looking at the research and thinking it through instead of having a knee-jerk reaction to dump the stock along with all of the other lemmings on Wall Street that are flinging themselves over the proverbial cliff. So the whole approach that we talk about in Toolkit is really based on this understanding. But we are going to update our data in Toolkit, update our stock studies, update the various worksheets. We're going to review the data, see if we can find signs of trouble. And then we're going to use the company SEC reports, the press releases, other internet research and analysis as we can find it to better understand what's going on with the company, if it's short-term or long-term in nature, and how it might impact our investment in that particular stock. So it all starts with updating the data. Now, Toolkit 6, one of the new features we added, one of the features that was added to, I think, version 5 is an update alert that will tell you when you start the program if data or prices are stale, if they're outdated. In the preferences section, there's a thresholds tab, and there you can set the data triggers as per your wishes. I'll flip over to Toolkit. Let me click on the Preferences tab because it's always good to review this. Here in Thresholds, you see the data triggers, and these are at the top, the 3 options there. It says prices are old after 7 days, data is old 45 days past quarter end, and data is old 90 days past year end. The idea here is that you can set those thresholds. The prices will show in this case, if prices are 7 days old, they will show as needing to be updated. They'll show in red, and they'll trigger the update price function in the portfolio homepage. The 45-day and 90-day triggers are based on the filing periods that companies have to file their quarterly reports with the SEC. They have 45 days past the end of the quarter or 90 days past year end. There are some companies that are on a sort of a faster track where they're required to file faster, but that's the traditional time frame. So the idea is that at the 45-day point, the company should very well have reported data, so you should be expecting to see it. Now, you might, if you wanted to, change those to be a week or 2 weeks or 3 weeks past those dates, or even set them on the date of the quarter end, set it 1 day. The reason you would do that is that many companies are now releasing press releases that are easily accessible and as soon after the close of their quarter. It might be the next day. You'll see some companies issuing some preliminary results very quickly following the close of the quarter. Others have a more reasonable schedule where it might be 4 or 5 weeks following the close of the quarter, and others will take the full close to 6 weeks. And sometimes the release schedule is adjusted by how well the company's performing. You'll see a whole bunch of companies reporting at the end of that cycle, and that will include many companies that have more negative results. They're hoping to get lost in the shuffle instead of maybe they've known the information for some time, but they're going to delay the release of it. But this is up to you how this preference works. I tend to find that that the defaults are fine. I don't rely on Toolkit telling me that the data is old. When I come to sit down and review my portfolio, I'm going to be proactive and see if there's data for the companies that I'm studying, and that will help me to, and then I'll figure it out manually if I need to. But the function is here. So this affects the update prices and the update data here. The update prices, you'll see here on the home page, is in red, and that means there are some companies that have prices that are older than 7 days. The update data is in gray. That means there are no companies for which data is available either 45 days after the most recent quarter or 90 days after the end of the fiscal year in this particular library that I have here. Now, you can update companies for on a company-by-company basis. You can update all companies in your entire library, or you can update all companies in a single portfolio. So if you Bob is pointing out, as I mentioned, that some of the 45 and 90, he's saying it would be more prudent to switch those to 35 and 60 days now, as the SEC is migrating companies into a faster filing schedule, figuring that they don't need as much time as they did in pre-computer age to get that information together, to collect it, and to report it. So again, I would certainly, that would be something that you can consider. Thanks, Bob, for pointing that out. So if we pull back to our toolkit now, we have the option to update companies. You'll see from the menu, we can update companies from the file menu. We can update prices from the file menu. We can update data for the whole library here by clicking on the update data. We can also update from a single portfolio. So here I've got a portfolio, one of my portfolios. I can click the Update Portfolio Data here and update all of the data. And you'll see in this portfolio, everything is current in this particular portfolio. The last quarter for many of the companies is March 31st. If I click on the column header again, you'll see one that's got data as of December 31st, 2013, but that's a locked company in my library. So that's why it's still going to be flagged as red, but it will not be automatically updated if I click the Update Portfolio Data button. And you see a number of companies that are still don't appear to have filed their first quarter reports, which would have been on 3/31. So these companies that ended the year on December 31st, not necessarily ended the year, but the most recent quarter, December 31st. So they would have had quarters that ended March 31st. So they're still within that window, and we would expect those companies to be filing in the not too distant future. So finding stale companies, another way to do it is in the personal library. There is the second to the rightmost column is the date column, and it toggles between the last quarter date, the last price date, and the last judgment date. So let me show you how that works in Toolkit. If we click on the library over here, this column, now you see it says judgment. If I right-click on that column, you can see here that I have options to select the last judgment, the last quarter, or the last price. So if I select last quarter, you see the header changes to quarter, and now all the companies are ranked by the last quarter from oldest quarter. So I have some companies here that the last quarter that I've updated is June 30th or July 31st. And then I have at the bottom some companies that have been updated as of March 31st, 2015. So there's a wide range there. A little tip is if you hold the Shift key down and click, it'll reverse the order of the sort. So now I'm putting the newest companies at the top. Generally, I might want to see the oldest companies at the top, so I'll click the button. Just click the column header. The L stands for the locked companies, so these are the red companies. These are the companies that I have locked and will not be updated in any circumstances. Jody asks why lock the data in a company. The reason is this implies here you see Bed Bath & Beyond parentheses original, Johnson Controls parentheses with estimate, eBay parentheses original purchase. This is a way of preserving the stock study that you used for a critical decision point. So perhaps this is the stock study that you used to base your purchase on. So you save that stock study, you create another stock study that will be your portfolio stock study that you'll manage your holdings with. But this way you can always come back to this eBay, open it up, and decide, see, what was it that I was thinking at that time? Because we are going to update the judgment on a regular basis in the program. In the old days, people actually would have paper copies, so they just put the SSG in a folder, and you never or rarely updated your paper SSG. So the whole methodology is built on a whole bunch of different worksheets, the PERT worksheet that we're going to take a look at later. So you didn't actually update your stock selection guide. You might plot the additional years on it to the right of the most recent year line or the most recent quarters, but you really weren't plotting, creating new SSGs or updating them in the way that we do now in Toolkit. So it's really changed the way we think about our stock studies and our quarterly reviews and updating our portfolios. But that's why those might be a locked item there. So you can kind of quickly see what are the oldest companies. So if I flip back over to my slides here, you shift click, and to trigger the judgment date update, we've had a question there about the judgment date. What triggers the judgment date? The last price date, that's pretty clear. The last quarter date, that's the most recent quarter. The last judgment date is the date on which you specifically set the growth rate or the high or low PE ratio, the low price selection, those judgment items. and those key judgment items need to be set in the stock study. So if when you're looking at, I'll flip it over to last judgment. So if we say, all right, so here is my Ulta Salon Cosmetics. Oh, you know what? Let's go down and find a different company. You see NA, because these are stock studies. They're red. That means I haven't actually completed a stock study for them. So let's say I'm going to open BioReference Labs here, and the data is of 12/5/2014. The last quarter is 1/30. The judgment date was 12. It's up here in the header, 12/5/14. The most recent quarter is 1/31. So there's no new data available. We'll assume there's no new data available. If I want to update the judgment date to signal to myself that I looked at this company today, I reviewed the growth rates, I said, yep, okay, we're still on track with my 8% estimates, so we're good there, and I flipped over on the back, and my low price selection, maybe I wanted to update my low earnings per share to reflect the last quarter, so I might flip that, and that would change my low prices. So then now you can see the blue diskette up here, the little icon, the save icon, is changed from gray to blue. That means I can save it. All I've changed in this case is my low price selection, and so I might review my P/E ratios as well. Now when I save that company, all I'm doing is saving my judgment. So if I go back and we look at the judgment, it's no longer here. It's going to be right there. So as of today, you see the 5/5/2015 where I updated the BioReference Labs. So let's do another example. Let's say we don't want to touch the data. So I'm going to open Chipotle. And I'm not going to touch any of the data. I'm not going to touch any of the judgment items. I'm not going to change anything. Yep, I'm happy with my 17%. If I open this, and I don't have to change anything, you then click OK, it triggers the stock study to say, all right, you need to save this. And if I click on the blue, the diskette icon, you see it's changed from gray to blue again. If I click on it to save it, now if we go back to the library, it's going to show up with that 5/5 with today's date. And you can see the judgment is now changed to 5/5/15. So that's the shortcut, but you can do it with any of the judgment windows, the P/E ratio selector, the low price selector, excuse me, the or the growth rate dialogues. If you click them open, that's telling the program that I've reviewed the judgment and I'm happy with it as of this date, even if you're not making changes to it. So that's the tip to get that going. There's some let me just jump in here and take a look. The Norm says, how do I have some stocks that were uploaded and are locked. How do I delete them? And Bob asks, how do you lock a study? Let me open up a company here. We'll open up a company. And this is United Insurance Holdings, one of our new companies that we're tracking in the small cap informer. From the data entry window, so click on the data icon, you'll see the little padlock here in the lower left. It says lock data. If I click on that, you can see all of the fields turn to gray and no longer can be entered, and in fact, not even clicked on. Let me, I'm going to restart my toolkit. So the idea is that those companies, that is now locked. So I'm going to reopen my reopen that same company, and we'll take a look at it. All right. So on the data, I click lock. I click OK. I save it. Now this company is locked. So if I open the data, I can't actually make a change because it's all locked. I have to unlock it in order to make a change. As I mentioned, one reason to lock it is to preserve the data from your original stock study. The other reason to lock data is that if you are making manual adjustments to the data for whatever reason, it could be that you are tracking a real estate investment trust so that you have replaced earnings per share with funds from operations per share. Well, if you don't lock that stock study, there's a chance that all of your data would be wiped out when you click the Update Data button by mistake, and all of your hard and hand-entered funds from operations data is now wiped out and replaced with earnings per share data. So clicking the lock is one way that you can save that. Another reason you might use the lock data function on an active company is that, for instance, there are a lot of companies in our small cap and former universe that are a little bit smaller, they're less mature. Often we're finding companies that are reporting non-GAAP earnings. And it may be because they've got some foreign currency transactions, or they've got some stock option expense or other non-recurring items, and those we're often taking those out of our consideration so that we're looking at the operating earnings of the company. So I have separate spreadsheets that I reconcile the data, the GAAP to the non-GAAP, and I replace the GAAP results that we get in the data stream, the data service, with the non-GAAP numbers. So those are all actively locked. When I update data in the other companies, I'm not so worried about GAAP versus non-GAAP. For those companies that I'm worried about that having non-GAAP results and I don't want to see it wiped out, I lock those companies. And that's my trigger that those are the companies I need to handle manually when I'm doing my update. So that, I think that's more common for the smaller companies than for the mid-size and large companies to see that. And that's part of what you subscribe to a newsletter like IAS or Small Cap Informer to get that expertise to help you understand and get a better stream of data. For instance, in IAS, they remove capital gains and losses from insurance company results because they don't want to see the results from investment gains, for instance, so they're making adjustments that you might not see in the data stream. So that would be the other reason that you would use that lock function. All right, let me go ahead and flip back over. And if as the companies are locked, you ought to be able to unlock them in the same way and then delete them. So that should work out. So to update a single company, it's from the company toolbar. There's a little refresh icon that's got data and price, and you can use that to download the update. So I'm going to go ahead and open a company. Here's T Rowe Price. Yep, and so this is got as of 9/30/2014. That's the last time I looked at the stock. Updated the data here. So now here on the toolbar you see the refresh icon. It gives you the option for data and price. So go ahead and click on data and we should see at least another quarter come in. Yep. Oh, we got 2 quarters. So we went from 9/30/2014 to March 31st, 2015. So now we've updated all of the data there, and we can continue from this point and do our review of the company. And again, it's easy. It's easy once you understand how to navigate in the library to sort these by, last quarter, last judgment, last price date, and really find the companies that might be stale in your portfolio. Now, you might see when you're doing the updates, you might see a split warning or a data discrepancy warning. If there's a stock split, the data will reflect the stock split, and if it sees that you probably might not have entered that stock split, it will ask you what to do. So it gives you some options to just perform the split, update the company. Don't perform the split, update without splitting the data, or do not perform the split and do not update the company, or cancel the update process altogether. Let me think about this and look at the data and make sure that I've entered that split if you can't remember that you have. The data discrepancy warning would happen if you were normalizing figures on your own, making adjustments to GAAP versus non-GAAP. When the data is coming down, if it looks at the quarterly numbers and the annual numbers and they're not quite the same as the new data that's there, it'll flag it for you and allow you the opportunity to escape. But it's not 100% fail-safe. It only checks a few data points. So if you want to protect your data and prevent it from being updated, you need to really lock that data, and that will prevent it. The price update is always now included with the data update. The reason they're separated, well, we still allow it because the Yahoo price service still has 20-minute delayed prices. But now the stock studies it used to be that the stock data was updated weekly. Before that, it was updated quarterly or monthly. So it took, you might want to update prices without having the data present. We still allow it today, have this price update function. There's two services and preferences. You can use Yahoo, which is 15 or 20-minute delayed prices, or the iClubCentral price feed, which has the closing price from the prior day. So we offer both of those. The closing price would match what you would see in My iClub, in your club accounting record. So it's kind of an easy way. If you know that you're always going to value your portfolio on the end of the month, on the first of the month, you can update all your prices with the last closing price of the prior day, and then they'll match your My iClub records. And we have control over the iClubCentral price feed. The Yahoo service we don't have any control over. We're just downloading the prices from their website. So as has happened several times in the past, they may change the functions, change the links, change the addresses, and those price updates would fail. So your recourse then is to switch over to iClubCentral until we release an update to the program. The manual quarterly data entry, and I see that Carla has asked this question. A company will issue a press release with results often well before they file with the SEC. The SEC filing comes at the end of those time periods, those required time periods typically. It takes several days for the data to be included in the Better Investing and StockCentral data service from the preliminary, but we consider it preliminary data. So Morningstar is aggregating the data that's coming in from press releases when companies announce their results. Now, these companies are also taking those press releases and they have to upload them to the SEC website in an 8K filing. It's substantial information that's being released, so they're required to report it there. So Morningstar is grabbing that data, and it takes a couple of days for it to come in. It could be a week or even longer for those, a week to 2 weeks. I think Morningstar doesn't consider it late until it's 2 weeks after the company has reported, or at least they tell us not to bother them until it's 2 weeks past that release point, the time of release of that quarterly result. And they update companies in order of popularity. So that means that the bigger blue chip Dow, S&P 500 stocks get updated, get priority in the update process, and then eventually it trickles down to the small cap holdings. So that's just the way of life. That's the way it works. There's not infinite capacity to update all the companies in real time. Now, as soon as we get the data onto our servers, we overnight are updating our SSG data. So if any data that comes in tonight, that may be reflected in tomorrow's SSG downloads and data updates in the program. We're not the hold up in the process, and there's really just not a whole lot that we can do to get it to be much faster without getting into what is considered real-time data, which you pay an arm and a leg for. So for the $75, $80 a year that members pay, the time frame is pretty reasonable, and there's not a whole lot that we can do unless we wanted to start charging hundreds of dollars for the same data. Then we could get a whole lot faster, probably, because of our bias, though. But I'm going to talk about how we can do that and how you can update your data quarterly, which will help in just those kinds of situations. And once you get good at it, it takes you about 3 minutes to do. So it's pretty straightforward. So the preliminary data that goes in first, and again, there's no indicator anywhere in Toolkit whether data is preliminary or final. You just got to kind of got to go with it. The preliminary data then is updated after the company uploads their 10Q or 10K or 8K to the SEC website, and then the new numbers come in, and those numbers are considered final figures, and those are then would overwrite the preliminary data in your stock studies. So in the case of Skyworks Solutions, which reported on April 30th, Carla says, and is not yet in the data service, here we are on May 4th. Yeah, that's pretty normal. We wouldn't expect that for another couple of days, perhaps. But what you can do is gather the data yourself from the earnings announcement. And I always say you can find numerous news sources that might be reporting a company's press release, like Associated Press, and they'll tell you the revenues and the earnings numbers. They're not going to give you everything. The press release that the company offers, that they publish, will come with the table of results that's got all the data you need to update your Toolkit quarterly data. By and large, also, let me just say that the preliminary data in our case, in these days, it used to be that the preliminary data was subject to kind of major revision. In many cases, the company would come back and say, oh, no, but we had some adjustments that we made after we released the earnings announcement. After the 2000s, where companies really were taken to task for their poor financial reporting practices and accounting standards were revised a little bit, it's not such a big deal today. Companies are not going to make preliminary results that are way off the base from what they report to the SEC. It just opens them up to all sorts of lawsuits and SEC actions. So we feel pretty comfortable with the preliminary data that comes in. So to update your Toolkit manually with quarterly data, you really need 4 items. You need the quarterly revenues, you need the quarterly earnings per share diluted, you need the pre-tax profit, which is probably labeled net income before taxes, and you need the taxes that were paid. And that's going to be labeled provision for income taxes. And here on the data tab, the data window, if you click the quarterly data, you're going to see that first quarter available. Now, here's another example. I'm going to open another company. This is Texas Roadhouse. This is a stock that I actually looked at on Saturday for the Northeast Ohio chapter. We looked at Texas Roadhouse. I've looked at it before. I think it's a great teaching stock. You can see the trend is pretty solid from what you can see there. You can see that the fiscal fourth quarter was December 31st, but I happened to see that yesterday, they issued their first quarter 2015 results. So that's certainly not available in the data update at this point. It just happened yesterday. So what I'm going to do is go to Yahoo Finance. So here is the link in the web links. You'll see the Yahoo Finance company profile, and we'll jump over to Yahoo Finance. And my here I am in the. Let me go back one screen and show you here. This is the list of the companies you see over here on the left side when you're at Yahoo Finance. After you've got a quote, you'll see the news and info section. There's 2 headlines and press releases. The press releases are things that the company has issued directly that typically come from Globe Newswire, Business Wire, PR Newswire, one of the wire services. So it's a service that distributes what the company tells them to. Headlines includes articles on the Motley Fool or TheStreet.com or Forbes or other sources like that, as well as blogs and web-based newsletters. It includes a whole lot of other information sources. The press releases are what we're going to aim for. If the company is very big, like Microsoft, then the headlines are going to be filled up with hundreds of items a day, perhaps. So it can be a lot faster to navigate the press releases, although a company like Microsoft may have dozens of press releases a day. But I like going to the press releases, even for a smaller company. And you can see, okay, first one, finalists announced for Kentucky Public Company of the Year Award. Well, I'm going to guess that Texas Roadhouse was one of them. But the next link, Monday, May 4th, Texas Roadhouse announces first quarter 2015 results. So real easy to get to on the Yahoo Finance website. Just look in the news and info section, scan down till you see the results. And you'll also see another link down here, Texas Roadhouse to announce first quarter earnings on May 4th, 2015. That's not going to tell us anything. That was on April 10th. They scheduled their earnings release and issued a press release for it. But you want to see really the announcement. So we click on the announcement, and they say they announced the results for the 13-week period ended March 31st. Here's the numbers for total revenue, income from operations, net income, diluted earnings per share in a nice table here. Right up front, before even any of the notes, because these are pretty strong numbers, 16% revenue gain, 23% EPS jump for the quarter, so that's pretty strong. As you scroll down, you'll see highlights above where they're talking about what they've accomplished during the quarter, and then as you scroll down, they've got their outlook. This is awesome. They're telling us what they expect some of the items to be for the first part of the year, or for the rest of the year. And as you continue to scroll down, you see the usual gobbledygook. But here's what we really want to see. We want to see the financial statements, the income statement. So here we have revenue, total revenue, which we're gonna use in this case. And as we scroll down, here's our income. Income before. Oh, let me highlight that. So total revenue, income before taxes, provisions for income taxes, and as we scroll down, we'll see the earnings per share as well. So if we flip back over to Toolkit, those are the figures that we need to enter into our Toolkit. Clicking on the data window, click over to the quarterly data, and now I need to enter the quarter, so I'm going to select first quarter 2015. So the program says, all right, enter the data for the first quarter of 2015. So if I flip back to my press release, I'm going to move it over here so I can see the data. The total revenue, and in this case, if you recall, the total revenue was included restaurant sales and franchise royalties and fees. They broke them out. But you can compare to last year. Last year, the total revenues were $397,142,000, and that's exactly what Toolkit is showing there. So I'm going to use the total revenue, which is $460.23 million. Hit the tab key. Now I'm going to find the earnings per share. The diluted earnings per share were 0.46. So type those in. The income before taxes was 48.457. And again, I'm comparing the year ago number. The year ago pre-tax income was 39.8. Yep, so that's exactly on target there. So that's just my double check that you're entering the right number because you made it match up. So 48.457, and then the provision for taxes was 14.876. So 14.876, and that's a little different from last year. The company reported 12.23 million. In the end, it looks like they may have made an adjustment, 13.41. But that's okay. It's pretty close to on target, so it's not going to impact us at this point. So having done that, we click OK, and immediately now you see the little quarterly trailing 12-month figures for sales, pre-tax profit, and earnings per share that have popped in, and the recent quarterly figures have all been updated at the top. So here is our press release just one more time to kind of review it. All we need are those 4 items, so they're all right here, easy to find. Total revenue, income before taxes, provision for income taxes, and then down here, the diluted earnings per share. And they call it net income per common share attributable, but that's what it is. It's the earnings per share. 46, 14.8 million, 48.45 million, and 460.23 million. Pretty easy to do, pretty straightforward. This is what all of us old-timers had to do before there was a real-time data service. We had to, we were updating our data manually using the press release information, and that's just a great way to stay on top of what you're doing there. Mary just tried to open Texas Roadhouse. The ticker symbol is TXRH, Texas Roadhouse. It may not be in the company library and toolkit, but that's always there. Does the data service always use GAAP EPS? I believe they do. There may, but again, that's a pretty broad question because there are all kinds of different companies, foreign, et cetera. So there may be some differences there, but my understanding is that they do. John says, John, you're having a toolkit problem with your display. You need to contact support, and we can help you with that question. Your display settings are screwing you up. That's what's going on after in your toolkit there. Rita asks, how do you get that highlighter pen working? That's a function of GoToWebinar, so it's not part of Toolkit or the internet. Although there are programs that you can use to mark up websites and save them in a function that's similar to that, but that's a function of Toolkit. All right, let me go ahead and jump back to my slides. We've updated the data. Now we need to start thinking critically. How do we review the quarterly changes? Certainly this quarterly box in the top left corner of the main page is where we can check the recent quarterly changes of revenue and earnings growth and make sure that it's compared to our projection. So in this case, sales were up 15.9%, earnings were up 23.7%. So that's pretty strong performance. If we look at our this particular company, and again, this is just for educational purposes, I have a 12% sales and earnings growth expectation. So 15.9 and 23.7 is actually pretty strong, a very strong quarter. If I flip back to the press release, I can read some more what they might have to say about why things happened. The CEO, we're off to a strong start for the year with another solid quarter of solid revenue growth, driven by increasing guest counts and new restaurant development. So you may have heard there's a lot of talk of food cost inflation. Agricultural products are becoming much more expensive by and large, and that would certainly impact a company like Texas Roadhouse. But they're saying they're able to manage it. And they had higher unit volume, but they mentioned up here their 5.2 commodity inflation. So prices went up 5.2% in the quarter compared to the prior year, mostly driven by beef costs. So tough business to be in, but that's a positive sign. The next thing we want to look at is the trailing 12-month changes. That's the little dot that's there. This figure, those dots represent the trailing 12-month earnings, trailing 12-month pre-tax profit, trailing 12-month sales, and we plot them on 1/4 of the way past the most recent year. What's great about them is you can look at those trends, look at those companies, and figure out what's the trend and how is that compare those results compared to the most recent year, the most recent. If I fire back my toolkit, how does those little dots, are they on track with the big dots? And you can see the earnings dot is up a little bit higher, so the trailing 12-month growth is actually higher than the last fiscal year growth for the company. So that's a good sign. So those numbers get input automatically, the little tiny dots that represent the quarters. And so the next thing is to update the analyst estimates. We've just updated data, so now it's a good time to review what the analysts have to say. And one of the neat things is you can look if your estimates have increased or decreased since your last entry. That's a really cool feature that allows you to get a visual sense if the company seems to be, the analysts are decreasing their estimates from the last time you studied it, maybe that's giving you a little bit of a warning sign there. So the analyst estimates up here in the top left. So here's what I have entered: 143, 168, 190, 205, sales of 1.8 billion and 1.9 billion for the next 2 years. If I flip back over to my my browser, I'm already here at the NASDAQ site, and you can see that my numbers haven't changed since the last time I updated them. So the 4-year forward fiscal year analyst estimates are right the same. as I had used previously, so I don't need to make any adjustments there. I can also look at the estimates for from the Yahoo side. Earnings are pretty close. If you look here, the sales projections are, again, 1.79 and 1.99, so that's pretty much right on spot with the estimates that I have entered there. Yep, so we're not going to make any adjustments there. Don't need to do that. So again, just to double check, want to make sure that we're on track, that the market and the analysts that are following this company are seeing that as well, and that those numbers are changing. Laura asks, where do you keep track of them? Well, what I'm saying is, if this number was all of a sudden 122 instead of 143, I'm making a mental note that analysts are lowering their expectations for the next year pretty significantly, and that is the trigger to perhaps go do a little bit more research. I'm not actually keeping track of all the analyst changes over time. The Toolkit doesn't do it either. But when you're entering or reviewing, my check here is that the analyst estimates haven't changed since the last time I reviewed this screen, so I'm in good shape. It may also be and then when you enter new years, you might need to add another year of data or another year of estimates to your data there. All right, another good double check at this point is to check your projection starting point. The preference is generally the last quarter, but you want to reconfirm that from the visual analysis screen when you're here. Just check your start projection point. Make sure it says last quarter, because that will have an impact on where the results are. It's going to actually make things a little better for Texas Roadhouse, because the last quarter is up quite a bit. So the new starting point going forward, and our analyst estimates are tracking that growth rate pretty closely, the 12% growth rate that I'm using. So again, I think I'm in good shape fundamentally. The outlook that I have jives with all the available information. The recent results are confirming my judgment, so that is a good sign for me. Then we'll flip over and let's look at the PE ratios, both the current now and the 52-week high and low. If we flip back to section 2, let me enlarge this, make it a little bigger here. You may not notice that here at the top of section 3 we have the current price and also the PE. So here's the current price, the current PE, the 52-week high price and PE, and the 52-week low price and PE. So in this case, what's important to look at, what I like to look at, is the PE ratios for the last 52 weeks. Now that's going to overlap with the most recent fiscal year, because we're only one quarter in. But on the other hand, you see some continued PE expansion. So we know that when 2015 comes in, the PE will at least be 29. The high PE will at least be 29.1. The low PE will be no higher than 18, and we can kind of compare those numbers with these numbers. How do they kind of fit together? And that's just another interesting thing that you can look at. And then the current PE 25, where does that fit in the range of the 52-week high and low PE? It's much higher than the average, but maybe there's some outliers, maybe there's some adjustments that we would make there. But it's always interesting to look at that while you're here, while you've got that new data coming in. Now, it's really key to reset your low earnings per share selection here. So for BA, selected low PE times estimated low earnings per share. The default is to use the last fiscal year, which in this case would have been $1.23, but our preference is to use the trailing 12-month earnings from the last 4 quarters. So now we have a new quarter come in that's going to change our trailing 12-month earnings, and because it was a strong quarter, it's actually probably going to have a pretty significant bump on what the low price would be. So I'm going to stick with my low PE of 10. Maybe that's a little low. And the quick shortcut is to press Alt-Q on your keyboard, and you can see here that the 123, which came from right here, sorry, and the 132 comes from right over here. And that's the trailing 12-month earnings. And now our low price went from $12.30 to $13.20 by that method. And on this particular company, that's not going to have any impact. It doesn't change I'm using the price the dividend will support, which is $23.90, because they do have a pretty significant dividend yield. And if the price were to get down to $24, yield investors would start jumping in because the yield would be at a historically high rate, and that would prevent the stock likely from dropping too much below that point. But it's always good. In many other cases, you're going to see a new low price that will be higher than the price you had selected before when you have positive earnings that have come in. So we need to reconfirm that low price judgment. And in this case, I wouldn't change it. I've settled on the price the dividend will support method for the low price, so I'm not going to adjust that for this particular company. But as I said, in many cases, you may have a new price. It's going to be struck out. It's going to show as the old price, and you will manually need to update it from there. So now we're going to dig a little bit deeper real quickly in the minutes we have left. The quarterly trend analysis, this is the traditional form of updating your company analysis and reviewing the fundamentals, also known as the PERT report in better investing parlance. The idea behind this report is that instead of redoing your stock selection guide 4 times a year, you would just enter the data, the earnings, the pre-tax profit, the sales, the tax rate. Here, you calculate and then do some calculations. You calculate the percentage change, and then you calculate the trailing 4 quarters results and the percentage change of those as well, and you would track them there. And you can kind of quickly, the idea is that you can scan down this report and see changes and see trends. And again, the problem with it is that, yeah, this is a highly numeric report, so it's a little bit hard to interpret. It's split down the middle, split right here, down, and this side, the quarterly data side, and this side is the 12-month data side. The quarterly data side over here, this is the what have you done for me lately side. How's the company performing on a quarter-to-quarter basis? The trailing 12-month side here on the right is what's the trend? What's the general direction this company is going? Is there anything subtle, any subtle downturns we need to be aware of? And that's the division there. Mechanically, in order to produce the right side, the 12-month data, you needed to have all the data on the left side recorded, because this figure here, the 132 earnings, where does this 132 earnings come from? It's the sum of the last 4 quarters over here. So if you add those 4 together, you get 132. So having all the data here that was relevant is the way that you can make these adjustments and figure out these changes and make all the calculations there. So it's really designed in a pre-computer, pre-calculator, paper and pencil-based world where you make all of these adjustments. Now you'll see that Toolkit has some red italicized numbers in some cases. If we didn't enter the pre-tax profit or the tax rate in the quarterly data screen, which sometimes you have access to the earnings and the revenues, but not the pre-tax profit and not the tax rate. If you enter those, Toolkit will extrapolate the percentage of the pre-tax profit and the tax rate based on the history of the company and the data that it has, and produce estimates so that this report will continue to work. But we filled in the data, so we've got it there. So what's important to look at? Well, we scroll down this percentage change column on the earnings, and again, you'll see some variations. Not every quarter is consistent. Sometimes the company has a bad quarter followed by, I don't see a whole lot of seasonality either. Last winter, they had a really poor performance, 0.3% change in earnings. We had a really tough winter that winter. This winter, they seem to have done better, but they're starting from a weak point, because this quarter was not a very strong quarter. This quarter was, the same, basically the same as the year-ago quarter. So we can kind of get a sense here. We have seen some negative growth quarters that we don't like to see that, but they kind of have been coming back. So we have some things that we can investigate and we can do the same thing, looking at the different values, percentage change of sales. Interesting, this company has been seeing its sales growth rate actually increasing a quarter-to-quarter basis. So that's really interesting. We see the sales growing from 5%, then up to the 13 and 14s, the 10, to 20, and kind of settling in this 10 to 15 range in the most recent year. So that's kind of an interesting phenomenon. You don't often see companies with accelerating growth like that. Then over here on the pre-tax, the last 12 months data, trailing 12-month data, then you're going to see the more smoothing of it. So you see, instead of the big variations, in this far right corner, you're going to see the percentage change, and these are going to run a whole lot more smoothly. It's going to smooth out. Those negative figures don't even appear, and you can see kind of on for the last year from this point, what have the results been. And the trend is actually pretty positive in the recent. Looks like they had a little bit of a downturn here and have recovered since that time. So that's interesting. Want to know more about it. I think the company is expanding beyond just the Texas Roadhouse. They have the Bubba's chain, so that might be part of it. They're diversifying. Could be good for the company. But again, that's all for you to kind of figure out and understand. And then finally, we're going to take a look at the quarterly trend graph, which shows us the longer-term trends on a visual basis. I'm fine if you want to skip that numeric table in the previous slide and just go right to this graph. You can gain a whole lot of information about what's going on with the company from here. Generally, the preference is to use the trailing 4 quarters, not the quarterly data. The preference is to show the earnings per share growth line, to show the change in the rate of growth. That's what we're seeing on this graph. The change in the rate of growth of the pre-tax profit primarily. That's where we want to focus. We want to see, is it rising, is it falling, is it above or below your earnings line? And the rule of thumb is that 5 quarters successive downturn is troublesome. 1, 2. So, this was, at some point in here, some investors would have been saying, you know what, it's time to get out of that company, but they've recovered since then, so maybe better things are ahead of them. In this case, I've got the earnings plotted. I'll take off the earnings. It's good that the earnings and pre-tax profit trail, but what it's telling us, this 12% line, that's my earnings per share growth line, a projection line. So I'm expecting earnings to grow at 12%. In order for that to hold true over the long term, by and large, the pre-tax profit should change about 12% or more on a regular basis as well in order to support the earnings growth. A company can do other things like buy back shares to prop up the earnings growth, but over the long term, we want to make sure that these figures are actually over the 12% line. This company has not had a great history, a consistent history of delivering growth above 12%, although they are now in that range with the most recent quarter up here. So that's really key, and then we want what to see what the trend is. Trend here, so this is saying that at this point, this peak here from on a trailing 12-month basis, the pre-tax profit grew about 25%. Then but that was kind of a strong quarter. The next one here, this is between 13 and 20%, so that's maybe 15, 16%. Profit growth. But then at this point, pre-tax profit grew over the last 12 months about 8 or 9 or 10%, below 12%. Here, 7%. Here, almost 0, but not quite, so 1 or 2%. Then back to 7%, up to about 10 or 11%, and now it's landed here. So this is showing us how quickly pre-tax profit, how greatly pre-tax profit is growing or declining on a trailing 12-month basis. This is not a pretty graph to look at for this particular company, which is, maybe one of the reasons investors are not, well, they bid it up quite a bit in price, but I would be hesitant because of the inconsistency that the company has there. So we are just past our closing time. Let me really quickly run through the questions that you have here and getting that. Rita asks about getting Toolkit on your iPad. No, it's never going to happen. We're not doing an iPad version of Toolkit. So the Better Investing Core SSG and SSG Plus are your best options for that. Bob asks about doing a webinar on GAAP data issues. So, oh, there's a webinar tomorrow. the Better Investing is doing in the Stock Up series, Bridging the Gap, how to evaluate data differences. So that would be very timely, very good. Check on the BI website for information about that webinar, because that is a lot of people have questions about that, and that would be terrific, a terrific resource. And be sure to look at the video archive later if you can't make it, can't attend. I don't know if that's a member benefit webinar or a fee-based webinar, but check the Better Investing website for that. All right, I think we've got most of your questions. I want to thank you for stopping by tonight. I hope you learned a little bit about the procedures to use in updating your quarterly updates in the Toolkit program. We'll look forward to seeing you at the Better Investing National Convention in San Jose in 2 weeks. I guess that would be the next week. The end of next week will be at San Jose. If you're in Las Vegas for the Money Show next week, I will be there with Dennis Genord from Better Investing. So please, if you're in town, drop by and see us there. And if not, we'll see you next month at the Toolkit User Group webinar.